Alright, good morning. Let's go over today's trade plan. So in the overnight session we saw that ES made another new all-time high and balanced above Friday's range for the most part. So that shows continued strength on the upside. In the other markets they held up relatively well. TF, we do want to see a trade above the 37 and 38 area today in order for the upside momentum and the upside strength to remain in place in the S&P and NASDAQ. So we will be keeping an eye on TF to make sure that it doesn't show continued weakness like it did on Friday. And ideally, we do want to see a breakout above 37 and 38 to confirm the upside strength. And a strong breakout above 38 could lead to a move back up towards 1145 and potentially up to 1151 to 1153 in TF. In the S&P, if we hold above 16 quarter to 1875, it would tell us that buyers are still in firm control. The main catalyst this morning is the ISM Manufacturing Index at 9 a.m. Central. So in the first 30 minutes, there could still be some back and forth, or at least some limited upside potential ahead of the econ report. It is an econ report that could increase the volatility short term and result in some short-term directional movement. Bigger picture, we know that the market is in a clear uptrend, and especially the S&P is leading on the upside and is the stronger market. But short term, if we get a negative reaction to the ISM manufacturing number, there could be a pullback down to pre-market support and potentially even down to the initial support zone at 0875 to 1075. So in the first 30 minutes, we just have to be careful because the market could simply stay in a range heading into econ, and then following the econ report, we'll have to see how the markets are reacting in order to gauge how strong or weak the market is short term and which side we should be leaning on. By default, we're still going to give more preference to the long side, but we just have to understand that even though the bigger picture context is bullish, there could be short-term price movement that results in a pullback, or we just short-term head lower, find buyers, and then start balancing in a range again. So just have to keep that scenario in mind. If TF continues to hold below the 37 to 38 area, that would be a red flag that perhaps the upside is exhausted in the S&P as well. For NASDAQ, we want to see it holding above 3730 and continuing to at least print marginal highs on the day time frame if the buyers are to remain in control. So short term, we can consider short setups, but we have to have very clear reasoning and some very clear indications that the market is short-term exhausted in order to take that short setup, because it would be counter trend and counter to the current direction that's in control. We just need to see some more obvious signs and then short the market. We're not trying to pick a top or identify a short-term extreme. We just need to see some clear signs in order to take any shorts. Otherwise, the focus will remain on the long side, especially above 24 quarter. Above the overnight high, there is no real resistance. ES would be printing new all-time highs. So the only thing we can really rely on is by looking at the relative volume and gauging what type of range we could get on the day time frame. The average range last week was roughly 8 to 9 points, and the week prior to that was about 12 points. So, we can look at the day's low or the day's high and then estimate where the market could head, given that the range is probably going to be between 8 to 12 points on the day time frame. So we'll keep that idea in mind. And on the upside, 29 to 31 is a potential target if we get a breakout to a new high, and then the market could hit some exhaustion around 31, and then 34.75 is another area where the market could be short-term exhausted and find some sellers, because even though the uptrend is intact, we know that the market is getting a bit tired up here, and we could start seeing some more profit taking as we get some higher prices here. So our stance really is the same as it was last week. The bias is bullish, but continuing to play defense on the long setups, because we are in the event of taking long setups up at these prices, they are aggressive prices, and we need to see continued upside momentum in order to stay with the long side. And if we see any signs of weakness, even if we're not shorting the market, perhaps we're simply taking profit on the long side and just being defensive with the long side positions. So that's another idea to keep in mind. So on the downside, 16 quarter at 1875 short term is an important area. As long as we hold above it, buyers can maintain control and we can still see a new high. In the event of a break below it, it would tell us that short term there is some weakness in this market. Perhaps we're heading down to 0875 to 1075, and then we can expect a reaction at initial support. Most likely that zone can shut off the downside, but if it doesn't, we can still expect buyers at the zone below it at 03 to 05, and by that point we'd be pushing a range extreme. The market would be quite extended to the downside, and 03 to 05 has very high odds of shutting the selling and reversing ES back up towards 1910 and potentially 1912. So on the downside, we can consider long setups at the support zones as long as we're not seeing huge momentum on the downside. So those are the main ideas. First 30 minutes, call for some caution. Once the econ's out of the way, then ideally we can get some directional conviction short term and then trade in that direction. Still going to be more active on the long side. We're okay with shorts, but we just need to see some very clear signs of some sellers stepping in and some downside momentum. So those are our main ideas. Let's see how well the market holds up following the econ reports, and we'll take it from there.